Hi everyone, let's have a look at my medium time frame and low time frame scenarios, including potential trading setup. Starting on the medium time frame, where I'm looking for a 5-wave move to the downside, followed by a 3-wave structure in a wave B, before then continuation to the downside in a wave C. Now this wave B in green, the 3-wave structure, is very complex, and just some general advice, right, from an Elliott Wave point of view, that it is very difficult to count this on the 5 or 15 minute time frames, and it is very easy to lose yourself on those low time frames. So if you don't have complete clarity about Elliott Waves and very clear scenario, just zoom out, go to the 1 hour, go to the 4 hour, and then wait patiently before you eventually get more clarity again, because I've been there in the past. When I started, I was trying to count all the lower time frame stuff, and you make it very difficult for yourself. Now when I look at the 1 hour, because I do have a low time frame scenario, by the way, about this structure over here, I'll show that in a second. But if we stick on the 1 hour for a second, look at this scenario. This is a wave A or then a W to the upside, followed by a 3-wave structure in this wave B or X, which might already be finished over here, for then eventually continuation to the upside in either a wave C or a wave Y. Now, if this is going to be a wave C, you want to see an impulsive structure to the upside. So a nice 5-wave structure to the upside, where an important target is the 1-to-1 fib over here that is taken from the low of A to then the high over here to the low that we made yesterday. And the 1-to-1 is currently sitting at about 30.4K, which also has confluence with my blue target box over here between 30.2K and 30.4K, which is a target box that hasn't been reached yet because price here rejected before actually hitting the target box. So it's still nice and fresh. Now, if this move to the upside is going to be a 3-wave structure, we're looking at this to be a wave Y. However, one of the targets is also the 1-to-1 for a wave Y, so that is actually quite the same. So this area for me over here between 30.2 and 30.4K is going to be very interesting for potentially the end of this corrective structure in a wave B and continuation to the downside in a wave C. Now, if price does move to the upside over here, then of course, when we look at trading scenarios, a short can be entered with a very clear invalidation being the high of 31K over here, for then looking to a move to the downside in a bigger wave C. Now, I do like some additional confluence. So of course, instead of catching knives or just FOMOing or YOLOing trades inside a certain area, make sure you have a plan, you have entry requirements, you have exit requirements, you have a strategy, so that whatever you see when price, if price is going to be over here in this area, if you see what you want to see, that is the moment one can enter. If price is going to push on high volume to the upside, then obviously over here there is no entry because, well, immediately stopped out, right? Just wait for what you want to see, following your strategy, and then eventually enter the trade, stop loss, and hopefully have a winner, right? Now, when we look at CVD and news, first the CVD, we do have bullish divergences between the low that we made before this whole range started. We currently have made a higher low on price, but both on the yellow and the blue line, we made a lower low on the CVD, which means bullish divergences. And the bullish divergence of a CVD over here, a bullish CVD, the main target for a bullish divergence is taking the high over here at 30K. Of course, CVD will not always play out. It can be leading, which basically means that even though we have bullish divergences because CVD is going to the downside, price might follow the CVD. So therefore, CVD is leading price to the downside. But of course, as it stands now, price has not yet taken the high of A, because that is basically the invalidation of the CVD, is if price is going to go below of this wave A before it takes the high over here at 30K. Now, we also have news going on. And if we look at the news, then today is going to be a very interesting day. So we have a lot of high impact news, which can be seen by the red flags, starting at 2:15 p.m., which is a Central East European time zone time. So make sure to go to the website, not affiliated, by the way, not partnered, but you can check out your time zone. And then for me, 2:15 p.m. Central East European time, that's when the whole shebang is going to start for today. High impact news all around the shop. So it's probably bound to be a volatile day, so whatever happens on the chart, make sure you trade safe, clear plan, clear stop loss, clear targets, or maybe not trade at all, right? Like just sit out during the news. That's absolutely fine as well. If we then go to another scenario I do like to show you, which is currently still an alternative scenario, with this then being my preferred scenario. An alternative scenario is if price is going to push to the upside, basically not taking into account this resistance we have, it's just going to push through the resistance to the upside. Then this is something that I'm looking for, where this is not a 5-wave structure in a wave A, but a 3-wave structure in a wave A, followed then by a 3-wave structure in then a bigger green B before then an impulsive move to the downside in a wave C. In this particular scenario, we also have the 2022 range highs at 32.4k, which is very, very interesting for a bit of a liquidity grab before then a continuation to the downside. The most common target area for a wave B in an expanding flat is the 1.236 and the 1.38 taken from the high over here to the low of this wave A. So this is an area that is definitely interesting if price is going to continue pushing to the upside. Now the reason it is an alternative is because it is quite difficult to count a nice clean 3-wave structure in this wave A. So therefore a 5-wave move in an A is currently preferred, and therefore the invalidation would then be taking this high. However, if price is going to take this high at 31k, then this is the next scenario I would be looking for, where the trading setup is to enter over here at the 2022 range high, stop loss somewhere safely above the 1.618, which sits at 33.8k, basically looking for a move to the downside. And again, follow your own strategy, follow your plan. I'm not a financial advisor. Then there is another scenario. As you can see by the grade analysis on the chart, I haven't gone too much in depth, but I did have, at least I was thinking about a scenario. Hey, what if price is actually going to take this low over here? What could we have? So then I would be looking at this to be a 3-wave structure, and then a wave A or a W, followed by then a 3-wave over here, a very long corrective structure in a wave B for potentially then a wave C to the upside, creating an expanding flat. So that is then a 3, 3, and then a 5-wave move. Now this is definitely not preferred, which you can see by my analysis as well, because it's absolutely minimal, but it is something I at least like to take into account, that if we continue to the downside, we might be able to find a bounce between the 1.236 and the 1.38 for then a 3, 3, 5-wave move, where the 1.238 and 1.38 is between 26.3k and 25.8k. However, when I do look to the downside, honestly, there is not too much support in this area. My next target box, if price is going to continue to the downside, is over here, which is sitting between 24.850 and 24.3k. So yeah, if we do continue to the downside, then probably the next area I would be looking for, preferably, is the yellow target box over here, and not really the potential wave B target area that I have over here. But still, we always need a scenario that in case price is just going to dump down instead of moving to the upside, we have to know a little bit what might happen next, because the other two scenarios, right, my preferred scenario over here is basically, even though price would maybe go down once more or continue up, doesn't matter, but it doesn't take the low of A. And also with this scenario, you don't really expect it to take the low of A, you expect it to move to the upside. If we then go to the low time frame, the only thing that on the lower time frame is at least quite like a little bit clear is that this looks to be a nice impulsive structure in a 1, 2, 3, 4, and then eventually a wave 5, where wave 5 reached the 0.618 target for a wave 5, which is taken from the high of 1 to the low of 3 to then the high of a wave 4. So this is one of the targets for a potential wave 5, after which now we have a move to the upside, right? So this can either be a wave C, a wave A, or a wave 1. If this is a wave C, it is the end of something and you now expect a move to the upside again. If this is a wave A or a wave 1, you expect this to only be the first structure and you expect this low to be taken. So basically what I'm saying here is the invalidation for this, actually let me put over here, so tada. So if this is a wave C, you expect this high to be taken. Right, so basically the invalidation for this being a wave C is if price is going to continue to the downside. So that this is the level of the invalidation. So if this is a wave C, the end of something, and you now want to see a move to the upside, the invalidation is if price is going to take the low at 27.6k. However, if this is a wave A or a wave 1, then you expect then you don't want to see price move above the impulse over here, the start of the impulse, because a wave A or a wave 1 has then a corrective structure to the upside that is not allowed to take the high before then continuation to the downside. So basically a wave A or 1 is invalidated if price continues pushing to the upside and takes this high, but a wave C is invalidated if price is going to move to the downside. Now, what is more likely? That is, of course, the big question. Now, what I would prefer is either this being the end of something, a wave C, or having, I mean, that's stretching it, but an ABC where eventually this low is not yet taken, right? But then we do have still the interesting area of a weekly and a triple bottom over here. So that could be an idea, but preferably I would like to see price moving to the upside. However, I don't control price. I have no idea what's going to happen. No one knows, right? So based on probabilities, we can at least have a little bit of a plan. But on the lower time frames, this is quite interesting. And this move to the upside, one can count this as an impulse as well. And that is actually like, if this is an impulsive structure, that's something you like to see for potentially more upside, where this then it can be a wave 1, 2, 3, now a wave 4, and then eventually a wave 5, where currently price is bouncing on the 0.5 Fibonacci taken from the low of 2 to the high of 3, which is a valid target for a wave 4, but you don't really want it to see price close candles below the 0.5, as very often that will invalidate a wave 4 for potentially a bit more downside, where, okay, you could maybe stretch it, making 3 over here, 5 over here, and then 4 over here, but now this wave 4 is very, very short compared to this wave 2, and then potentially a 1, 2, and then continuation to the upside. It is still a scenario that I have in my mind, because we do have a point of control over here at 28k basically, and we also have a daily that I can show you at this level at about 28.1k. So there is a little bit of support over here for maybe then this being a wave 1, 2, and then continuing to the upside. But of course we have to wait and see. Now, we didn't have any local low time frame bullish divergences, which is, I think, like not necessarily unfortunate, but it is something that I like to see. We do have some little bullish divergences going on over here in yellow, but yeah, I would have liked to see some bullish divergences in this area over here, but they were non-existent. But yeah, of course you don't need those per se, because we had the bigger bullish divergences, right? For then maybe a push to the upside. It basically shows a bit of absorption. So the lower time frames, yeah, it's quite complex, where only if you get an impulse, you might have a look at, is this a C, A, or 1? I would prefer this to be a C, and now moving to the upside. But then again, it's going to be a very volatile day, or at least likely to be a very volatile day. So yeah, it could wick to the downside, wick to the upside, or sideways. You know, as always, we play the probabilities with Elliott Waves. We have different scenarios. We prepare for what might come. But I do have in my trading a separate specific personal developed trading strategy to enter my trades. So I do think it is very important that whatever happens today with the news coming in and everything that's happening with all the different scenarios I show, make sure you have your personal developed trading strategy and stick to your strategy, guys. I hope you have a safe day as well. I hope this video was helpful or valuable to you. Please check out the macro or the high time frame video if you're interested. And for now, thanks for watching and subscribing, and I will see you at the next one at 7 p.m. Central East European time, because unfortunately I can't give an update at 1 p.m. today. So I hope you have a good day. Bye bye.